Welcome to Explain the Charts, where we break down the data behind the world's most watched indices. Today is April 11th, 2026, and the tech-heavy Nasdaq 100, tracked by the QQQ, has been making incredible headlines. Before we look at the candles, we have to discuss the massive shift in market infrastructure that occurred this week. The SEC has officially greenlit Nasdaq's plan to tokenize securities, essentially paving the way for 24/7 tokenized stock trading. This partnership with Kraken is a fundamental shift toward always-on markets and is likely fueling some of the long-term optimism we see in the price. Furthermore, Nasdaq Chair Adena Friedman has emphasized the role of resilient capital markets in driving growth, especially as AI continues to transform the economy. Business leaders are committing significant investment to AI technology despite global uncertainties, which keeps the bullish narrative alive for big tech. On the macro front, traders are largely betting that the Federal Reserve will hold interest rates steady through the rest of 2026. Confidence is also growing in the upcoming leadership of Kevin Warsh at the Fed, which the market seems to be pricing in as a stabilizing factor. While Middle East tensions have caused volatility, recent peace talks have lifted investor sentiment across the board. Now, let's look at the daily chart to see how this fundamental news is translating into price action. Looking at the daily chart, QQQ has been in a very clear ascending channel throughout most of 2025. As we moved into late 2025, the index hit peaks near 635 before undergoing a healthy consolidation phase. However, the start of April 2026 has brought renewed vigor to the bulls. Notice the price action from April 6th and April 7th, where we saw a solid base forming around the 588 level. The candle on April 8th is particularly interesting because we saw a massive gap up to open at 608.71. This gap up coincides perfectly with the news of the SEC's approval for equity tokenization. On April 9th, the momentum continued with the price closing at 610.19, showing that the bulls are currently in total control. The volume on these most recent days has been substantial, with over 63 million shares traded on the breakout day. The VWAP for the final day shown was approximately 607.46, meaning the close at 610 is quite bullish relative to the average price. The high of 610.50 from April 9th now serves as our immediate short-term resistance. Switching to the 1-hour chart, we can get a much clearer look at the mechanics of this week's breakout. We can see the period of consolidation late in March where the price hovered between 570 and 580. The breakout on April 8th was a vertical move that left a large liquidity gap below the 600 level. Often, these gaps act as magnets in the future, but the current strength suggests the bulls might not let it fill just yet. On the hourly time frame, we see several candles with higher lows, confirming a strong intraday trend. Specifically, the support at 603 proved to be very resilient during the minor pullbacks on April 9th. The transactions count jumped to over 900,000 on some of these hourly bars, indicating heavy institutional participation. This volume confirms that the move isn't just retail speculation but has real backing. If the price can hold above the 605 WAP level on the hourly, the next target is that psychological 615 level. However, we must watch for any sign of exhaustion as we approach the previous multi-month highs. Diving into the 15-minute chart for the most recent session, we see how the intraday battle played out. The open on April 9th was at 603.30, and we immediately saw a push toward the highs. There was a brief period of consolidation between 604 and 605 before the late afternoon surge. This late-day rally took us all the way to 610.37, which is a very strong sign of a buy-the-close mentality. For day traders, the level at 608.50 has flipped from resistance to minor support. As long as we stay above 607 on the 15-minute time frame, the short-term outlook remains incredibly bullish. The VWAP on this time frame ended the session at 609.53, showing that buyers were willing to pay up until the very end. The total volume for the final 15-minute candle alone was quite high, signaling that momentum is carrying over into the next week. If we see a break below 603, however, we should be prepared for a quick test of the 598 level. Let's zoom back out to the daily chart to recap our important price levels and predictions. In summary, QQQ is currently riding a wave of positive fundamental news regarding market modernization and tech growth. The key price levels to watch are 613 as immediate resistance and 635 as the ultimate target for this run. On the downside, 603 is our first layer of support, followed by the critical gap support at 588. I believe there is a 70% likelihood of QQQ testing the 620 level by next week if the current momentum holds. This scenario is highly likely if the U.S. Michigan consumer sentiment data remains positive and inflation stays in check. There is a 30% chance of a pullback to fill the gap at 590, especially if geopolitical tensions flare up again. Long term, the trend is up, but we must remain cautious of overextension in the tech sector. Look for a consolidation above 610 to reinforce the likelihood of a move toward new all-time highs. Stay tuned to explain the charts for more updates as this market transformation continues. Finally, please remember that this video is for educational purposes only and is not financial advice. Always perform your own research and consult with a professional before making any investment decisions.